Welcome to Marty Speaks, where all hustlers, young and old, come to get the knowledge they need to dominate their day. I'm your host, Marty, and today we're going to be continuing on part 2 of different types of stocks in the stock market. So if you haven't already seen part 1, I definitely recommend you guys check it out. We went over a lot of things like what are blue chip stocks, growth stocks, value stocks, and income stocks. All great stocks to know about and all great stocks to have in your portfolio. So we're going to continue on with cyclical stocks, defensive stocks, tech stocks, and penny stocks. We're going to kick it off with defensive stocks. Now, when you think of defensive stocks, I want you to think of companies that are truly reliable to your day-to-day lifestyle. They are a necessity. They are the Johnson & Johnson, they are the General Mills. These are companies that provide us with food, shelter, utilities. So I don't want you to get confused with restaurant stocks because I understand they provide us with food, but they're also on the luxury side. Like, you don't need McDonald's, you don't need Burger King. So don't get confused with that. Another thing I don't want you to get confused about is defensive stocks and defense stocks. Defensive stocks, like we just covered, they have food, shelter, utilities. Defense stocks cover guns, tanks, submarines. Think of General Dynamics. Think of companies that have a military contract. Another great thing about defensive stocks is that they have steady earnings, steady dividends, and also perform very well under any economic condition, simply because their products are used so much by so many people on a day-to-day basis, and they are so reliable. So when you are investing in these types of stocks and these kinds of companies, you're not really expecting a crazy return, but you're also going to be investing in a company that is extremely reliable and is a great buy and hold. So with that said, we're going to go on the opposite side. Like we said, defensive stocks are a necessity. We're going to talk about cyclical stocks. Cyclical stocks are stocks that are truly affected by the economic cycles. So these are the types of stocks that are on the luxury side. These are stocks you're not really going to be spending on. These are companies that you're not going to really be spending on unless you have the money laying around. So I want you to think of companies like airlines. I want you to think of car manufacturers. I want you to think of hotels. Companies that are only really affected by the economy itself. The economy is going up. People have more money to spend. People are going to buy a new car. People are going to go on vacation. People are going to buy a plane ticket to go on that vacation. Same thing happens when the economy goes down. People aren't going to be spending that much money. People are going to start saving. Sales are going to go down, and so will the stock prices of those companies. Now, when it comes to investing in cyclical stocks, it's pretty tricky because you got to get in the right time and you got to get out of the right time. You got to get in right when a crappy business cycle just ended, and you got to get out once a good business cycle just is about to end. So if you can stay in tune with the business economic cycle, by all means, I definitely recommend checking these kinds of stocks out. If not, I wouldn't really risk it. But we're gonna move on to penny stocks. Now, with penny stocks, these are usually stocks that are $5 or less, extremely volatile. I recommend you guys, going with extreme caution if you decide to go down the penny stock route, only because you could lose a lot of money. At the same time, you can get an amazing return, but at the end of the day, those stocks are really hard to find. And there are plenty of courses online you could take to, find out, what to look for in a certain company in a penny stock when it's going to go up or it's going to go down. But that's not really my area of expertise, so I stay away from penny stocks. Another, con about penny stocks is that since they have such low capitalization, such low money, they aren't required to, report files to the Security Exchange Commission, which means there's not going to be a lot of information about these companies. You're only going to have so much information to truly, grasp what the company's doing, what kind of products they have, how much money do they actually have in the revenue. And a lot of shady things could happen in the penny stock world. So if you have an idea of, what kind of penny stocks you are thinking about investing in, don't just throw your money at it. Follow the company around for a couple weeks, months, see if it has growth potential, and then from there, truly evaluate if you want to risk it all and, put some money into it. I would never recommend putting, you know, a huge amount of money in penny stocks, because, you know, anything could go wrong, and a lot can go wrong in the penny stock world. So you could be losing a lot of money. So I definitely recommend you guys, if you have an idea of what kind of company you're looking for, just make sure it has, you know, great leadership, and the penny stock is in an industry that has great growth potential. You don't really want a penny stock that is in the same industry as, you know, Sales or Sears or JCPenney, because you know, it's only a matter of time before Amazon just kicks those guys out. So just be wary if you decide to go in the penny stock, you know, side of the stock market. There's plenty of help out there. I know there's a lot of people who do it and they found a lot of success in it. So by all means, talk to someone who has found success in it. I wouldn't recommend going down this road alone. So next thing we're going to go over is tech stocks. So tech stocks are companies that produce and sell a broad range of, you know, physical products such as computers, smartphones. They have video game software and biotechnology. You know, if any of these companies sell products like that and they are publicly traded, they are considered a tech stock. So you got eBay, you got Amazon, you got Apple, you got Google, and a real big thing to hit on when it comes to tech stocks is that a majority of these companies are overvalued. But there's a reason for that. There's a reason why a majority of these tech stocks are overvalued, and that's because a majority of people are putting a lot of money in these companies, not because of what they have now, but what they will have in the future. You'll see that, you know, it's only a matter of time before, you know, Apple comes out with the iPhone 12 or, you know, 13, and, you know, people are putting their money in Apple because they believe that they are going to come up with more innovation to truly make their company rise and constantly have that their company be the lead in their industry. So you have to be wary of that. You have to realize that if you do decide to invest in tech stocks, that a majority of them are overvalued, and a majority of them are, you know, invested on because of what they are promising. Now, a majority of the time, you know, it could be a success. You know, their new product could be a hit. It could be the next iPhone. It could be the next eBay, and it could be some of the most, you know, amazing, you know, returns you could ever have. But at the same time, you know, it probably will miss the target by a mile, and usually that's how tech stocks end up disappearing. And you just have to be careful where you're putting your money, and you have to be you truly have to do your research on tech stocks, because you want to make sure that you're investing in the right ones, and you want to invest in ones that have solid products that are promising future developments that are truly going to innovate the company itself. So that is all for this episode. Remember, defensive stocks are companies that are a necessity to our lives, and cyclical stocks are the luxurious side of life. So, you know, if the economy is going up, you know, cyclical stocks are going to be on the rise. Penny stocks, be careful. If you decide to dive into this world, don't go in alone. Read on the subject, get some help, get some mentors on it, get online courses, whatever you got to do. Just don't lose all your money through penny stocks. Please don't do that. And tech stocks, you know, you gotta be aware that yes, it's gonna be, the majority of the time it's gonna be an overvalued company, but at the end of the day, it's because they're promising a lot of products to your investors that it's truly gonna bring their company to another level. So you always just want to do research on whatever you're going to invest. Don't just throw your money out there. Remember, it's your money. You know, you have to be wary of that. You got to be, you got to protect your money as much as you can, and you got to know what you're investing in. So I really hope you guys enjoyed the video. If you did, like, share, and subscribe. That's going to be all for today, and I'll see you next time. Adios.